Why this airdrop was interesting and why it was so notable was because it was $700 million notional value at the time of the drop. So one of the biggest airdrops ever, one of the biggest token airdrops ever on Solana. And even today, I think some of the people are still posting screenshots of how much they got airdropped, and we see just stories of like 5-6 figure airdrops, which is insane if you think about it. Just using a product pays you like an annual salary for like an average Silicon Valley worker.
Three offers a brand new petri dish.
Our job is to buy great tech at great prices.
AI is also libertarian, right?
Enable use case that people haven't been able to do today.
The next hundreds of millions of players, they will come to the market through mobile.
My personal reason why I could be bullish in the next 12 months is
Welcome back to another episode of the Blockcrunch podcast with me, your host, Jason Choi. I'm an angel investor and founder of Tangent, and Sanat, investor at Dragonfly Capital. Now, as a disclaimer, nothing we discuss here is financial advice, and nothing we discuss is reflective of a respective company's opinions. We may also hold assets we discuss. So the context for this week's roundtable is that we just finished Q1 of 2024, which has been a whirlwind. I think it's probably the most consequential 3 months in the history of Bitcoin as we hit all-time highs and have a massive ETF just got approved that blew everybody's expectations out of the water. So if you're coming back to crypto after a few years of break because you saw a notification on your Coinbase app telling you to buy Bitcoin now, this is that episode that tells you everything that happened in the first quadrant, in the first quarter of 2024. And there's quite a lot. And I'm really excited to have Sanat here to recap everything with me. We try to curate a list of just the 5 or 6 kind of most major events that happened, but we ended up kind of coming up with more. So if we have time, we try to cover all of them. But before all of that, now Sanat, this week you're in the US because you just went to ETH Denver. How was ETH Denver this time around? Was the trip worthwhile?
Yeah, I mean, ETH Denver was good. Crypto conferences all start to feel very similar. And I guess the interesting thing is you kind of see trends get hotter and trends get less hot. So like, I don't know, I was at ETHCC in Paris last year, then I was at DEF CON in Istanbul, and I was at ETH Denver. And every time, like, the chorus around EigenLayer got louder and louder. Where like last summer in Paris, people were kind of interested. This year, I swear, there was like a restaking or EigenLayer related event, like going on all the time. Like anytime you could ask someone where they were, and they were at the EigenLayer event, and that was just true for like a period of like 5 days, which was kind of crazy. Outside of that, I think people are excited again. You can kind of see the smiles returning to people's faces. People are objectively also obviously wealthier. Lots of teams are really excited about token launches, which is cool. I think we're finally seeing the effect of like a whole bunch of companies, including our portfolio companies, are seeing that the token launch window is open. So a bunch of teams that have been building through the bear will be launching tokens soon. So lots of conversations around that. People remain excited about ZK. I think people in Ethereum land are spending a lot of time thinking about roll-up fragmentation. I think it's, especially given Justin Drake's recent push around it, I think the Ethereum community is seriously starting to realize that the UX of using 10 different rollups just kind of sucks a lot. And they're thinking through how to solve that problem. As with all ETH events, a lot less excitement around the application layer, but that's just kind of the way things are. And that's also, the valuations are all in the infra layer for right now. So I suppose it kind of lines up with what you'd expect.
Yeah, I mean, I guess it sounds like same old, because I remember I went to the 2023 one, and it was pretty quiet because that was right after all the blowups that happened in 2022, Luna, 3AC, and then obviously FTX earlier as well. And I remember the only things that people were excited about were like NFTs and games. So I guess this time people are kind of swinging way back to the infrastructure in terms of the app to infra pendulum, which I feel like crypto always operates in. But it sounds like you had a fruitful trip. I'm excited to hear that. And I'm sure there's a lot of chatter around Bitcoin as well. And that brings us to kind of a first big recap for Q1, which is Bitcoin hits all-time high. But it's more interesting to me why it hit all-time high. It's because we finally had this institutional ETF approved, actually multiple ETFs approved, which was unthinkable back in 2019. I think a lot of people were saying institutions are coming. That was the meme in 2019. And now they are really here. And then I think the numbers for the ETF also blew everybody's expectations out the water. So it started with about 20 billion, I think, in the first week, and then slowly rising every single day. Every day we were tracking the inflows for Bitcoin ETFs, and it was at least $500 million, sometimes more, sometimes a little bit under. But now we're sitting at almost $52 billion just sitting in Bitcoin ETFs. So I guess, did that surprise you at all? Did you have $50 billion Bitcoin ETF on your bingo card for 2024?
I did not. And it's funny you say it was unthinkable in 2019. To me personally, it feels unthinkable versus like November of last year, like post FTX. You remember how like we were like having conversations about, or at least I was having conversations about whether I should still work in this industry. And the pace of the rebound has been shocking. I think overall the speed of these things has taken me by surprise as well. I guess one way of putting it is like, I'm not surprised because I believe in Bitcoin, and it's cool to see other people like get it. It's like I've for like 4 years of my life been like telling everyone in my life that Bitcoin is like digital gold. It's the coolest asset. You want to own some. And it's cool to see like the floodgates open like this with institutional money. But yeah, I've definitely been surprised by like just how fast everything has happened. It feels like, I don't know, it feels like from December of last year, just like prices are like on an upward trajectory nonstop. And it is cool to see how much inflow the ETFs are getting. And it's also nice to see the GBTC story, which I know you've dug into more, kind of being negated. Whether when the ETF came out, a whole bunch of people were like, oh yeah, all that'll happen is like the GBTC people will sell some, they'll go into other ETFs because of fees, and then we'll be back to square zero. This was definitely not a buy the rumor, sell the news event. This was actually just like bullish. People want Bitcoin.
It felt like a new beginning for Bitcoin, and it's hard for us crypto natives to really contextualize these massive TradFi numbers because I think when 3AC, which was one of the biggest funds in crypto, was around at the peak, they were allegedly $10 billion. And $10 billion is a massive amount for crypto. It's like the biggest fund in crypto. And then now $10 billion is like a drop in the bucket for TradFi. So I was talking to actually a family office here in Singapore pretty recently just about what their views on Bitcoin is, and they basically mentioned that Bitcoin is an asset that's designed for speculation, right? In no other asset in the world do you have something that halves its supply every 4 years. So it's like almost constructing or manufacturing a bullish narrative every 4 years, and you have something that's not confiscatable. You have something that's really cheap relative to gold to transfer around. So I never thought about it as like the perfect speculative vehicle, but what this family office manager told me was basically, if you were tasked with designing the most speculative assets in the world from scratch on paper, Bitcoin is exactly the outcome. So that was quite interesting to me, that people are thinking about it this way. And it feels like something that's a little bit boomerish, especially when we look at all these like roll-ups and data availability layers and so on. But to most people in the world, I think Bitcoin is still quite novel. And now that they can access it without thinking about on-ramps and off-ramps and just buying it through ETFs, that's actually a massive paradigm change, right? It's not like one of those sell the news type of events as you mentioned.
One question I have for you is that like we've always historically been in this, money first flows to Bitcoin, then it flows to Ethereum, then it flows to alts. There's like all these graphs of like how to play alt season that like traders are always throwing around. Do you feel any worry that like there's all this institutional capital that has found a way to flow into Bitcoin, but it may not flow into the layers below? So it's like unclear that the guy who's buying your Bitcoin is also going to buy your Harry Potter, Sonic Obama 10 Inu.
Yes, absolutely. I mean, this is a debate that I've had with my teammates almost every day as well. My contention was basically TradFi is comfortable with Bitcoin now. It's taken us 10 plus years, 10, 20 years to really get these guys into the narrative of digital gold. And it's not an easy narrative to flip because it is a narrative that relies on other people believing in it, right? It's basically like the gold delusion, but you're trying to recreate from scratch with only like 20 years. So it took this long for people to really understand it, to get comfortable with it. And I think a lot of people are focused on the deflationary aspect, or at least the capped supply aspect of Bitcoin. And whenever you mention Ethereum, even though at times it's deflationary now because of the fee burn, most people's perception in the mainstream is still that it's inflationary. So I think that's a big mental leap for people to go from Bitcoin to ETH. And then liquidity, as the liquidity question as well. The TradFi numbers are so big that we always think of Bitcoin as like incredibly liquid, Ethereum as incredibly liquid, and then And our definition of illiquidity is like a 50K type of shitcoin. But for TradFi, it's some of the top 10 crypto assets that we consider to be the pinnacle of liquidity in this industry are very illiquid. So it's very hard for them to go down the list, actually. And I think that a huge part of this is also Bitcoin seems to be like a macro asset now, right? People talk about it, in terms of being an inflation hedge, in terms of being a liquidity index for the US dollar liquidity. But people talk about Ethereum as if it's a tech bet. So it's two quite different crowds and two different buckets of capital. So I'm a little bit skeptical that the capital in Bitcoin finds its way to ETH so immediately. I think the changing factor, the variable there will be an ETH ETF, right? If you have TradFi guys starting to come out and say, actually, ETH is just like Bitcoin, but it's more environmentally friendly and it's faster. Maybe you can spin some sort of an ESG angle, which is what we saw with Bill Ackman tweeting about it a few days ago, talking about how Bitcoin might, collapse society by consuming too much energy. So let's buy some Bitcoin. That's the kind of general view there. I'm not sure if that kind of coincides with the view that you have or you have in your circles as well.
Yeah, pretty much exactly the same. I'm very curious to see what happens with the ETH ETF. I've seen that it feels like people are getting more bearish on. I saw on Polymarket the price fell from 60 cents to 30 cents, which is now my go-to for seeing where it's a pretty liquid market. There's been a couple $1 million bet already. But yeah, I don't spend a lot of time trying to read about ETFs and stuff. And so I was just kind of in the bucket of people who was Bitcoin ETF happened. I feel like an ETH ETF will also happen. But it feels like the market is kind of re-rating that. I do agree that I think it's going to be challenging for this kind of liquidity to flow into other assets.
Yeah, no, I encourage our listeners to look at things like the ETH discount as well, and also the CME open interest on ETH, and kind of study the parallels between this and also what happened to Bitcoin before the ETFs, because that is saying something very different from the prediction markets, which I thought was interesting. But I think going back to your question about where the capital flows. I think it's very interesting now that we have a lot of institutionals and maybe even retails buying ETFs. And then on the other hand, you have a large part of the market just flipping way to the other side of the IQ spectrum and just going straight into meme coins. So this is the second big thing that I think happened in the past quarter, which is quite recent. And, some say it's still happening right now as we record this. It's the meme coin mania. So just to give some context there, I think meme coins reached $6 billion in total market cap. Obviously, it's led by Doge and Shiba. Some people say it's because Shiba launched their own layer 2, and now people are pricing in the fundamentals. It has nothing to do with that. The entire meme coin vertical just re-rated. And we have some newer names like Pepe, which is this green frog, just re-rating I think 4x in a month. And then there's this dog with hat thing. And then I think recently we started to see a lot of meme coins pop up on Solana as well, with these deliberately misspelt names of presidential candidates. So there's Doolin Trump and Joe Biden. I don't know what's going on, man. I think it caught a lot of people by surprise. I mean, meme coins have been around for a while, but this time it seems like retail's just kind of skipped all that DeFi, NFT, L1 nonsense and just straight went to the deepest fundamentals, which is the meme coins. What are your thoughts there?
No, it's endemic for sure. Someone I know pretty well who came from a TradFi background and always struck me as one of the more TradFi-esque people in crypto, has been shilling me Zyn, ZYN, which is the nicotine supplement, which is a coin that has just been ripping for the past 3 weeks. It can't stop going up. Nansen even wrote a thread about it. I'm just what are we doing here? I think it is crazy. On the Joe Biden thing, I was also thinking it was so funny that there was a whole bunch of people who were shilling the Biden coin on Ethereum. For 2 weeks before that, because they were oh, Trump is 10x the market cap of Biden, this is mispriced. And their thesis was completely right, except it didn't work for Biden, it worked for Buden on Solana and not Biden on Ethereum. Just poor guys. I guess the thing that I think most interesting here is that crypto's always been an outlet for speculation, and speculation that is bordering on gambling. That has always been a thing. And there are many ways to do degeneracy. When I was most interested in 2020, you could enter some some token that was named after food that was doing some kind of farm. You just kind of bridge to a new chain, put your money into it, just kind of hoped for an APY, hoped to sell before like the token crashed. There was this Ohm Fork season. Do you remember where like every chain there was like an Ohm Fork launching, and it was like, oh, who will be the first there? Like, how do I get early access? Perps have always been like perps can obviously be used pretty responsibly, but they can also be super degenerate when you're like 50, 100x leverage. There's this trend of people on Rollbit who like open a long with 100x leverage, and then they like actually make a video of it and put it up on TikTok, because like 95% of the time they get liquidated immediately, but there's like a 1% chance they make a bunch of money. And it feels like meme coins are like currently the gambler's instrument of choice within crypto. I've always been curious to see whether they last. It is crazy. Like, I don't know if you've ever gone onto like one of the deployment pages, but if you just go onto like deck screener, this is like people creating meme coins nonstop for every like thing under the sun. And to me, it just feels like lottery tickets. And I'm like happy for people to play lottery ticket games that are positive EV. But I can't really tell whether it's like a lasting paradigm or whether this gambling energy will go somewhere else. I don't know. What's your experience been?
Yeah, I think you make a great point about the food coins, because just for our listeners who are not aware, so this is back in 2020 during the so-called DeFi summer. There's a lot of DeFi protocols that were being spun up every single day, and they were themed after food. So there's like Ramen Finance, which had a DEX, and also like a lending protocol, and you could stake your tokens and farm it. So they would give you a lot of incentives early on to bootstrap it. But if you strip away all of that, it's really the same thing, right? Like, sure, some of these teams might have stuck around and actually built up products like Sushi, but most of these, like, come on, like most of them were not going to ship anything anyway, and these were just memes. And I think there's a really recent and interesting thread by Travis Kling from Ikigai Capital, where he titled his thesis for 2024 as financial nihilism, which is this idea that people just drop all pretense of any of this thing mattering at all, and people just kind of swinging way to the other side and saying that actually nothing matters, none of this has any meaning. Value is completely subjective. Screw fundamentals, screw cash flow, screw products, screw revenue. We're just gonna bet on memes. So this time around, I kind of see these meme coins as the same thing as those food-themed DeFi coins, but without the DeFi aspect. They're not even pretending anymore. They're not even saying that we're gonna build a DEX. No DEX this time. Just straight up a coin, misspelled name of Joe Biden. Just go buy it or go away. So that's kind of what's happening. Part of me, I do understand where some of the kind of ivory tower people on Twitter are saying, oh, this is all speculation, we shouldn't touch this, your meme coins are bad for the space. But on the other side, right, I think a lot of people are looking into crypto for the first time because of these kind of meme coins, because it's fun. People are not, I don't think any rational adult would put in their entire net worth into, Zin coin or like Nick coin, but these guys are maybe chucking in like $100, right? Just to see how it goes, and if it goes up, it piques their interest, and they come into crypto. And they also usually have to use DEXs to buy these things. So for a lot of people, it's the first time they're interacting with DeFi. So in a way, it's like an interesting little, top of funnel user acquisition tool for all of crypto. So who am I to say that this is like, lower brow than like some of the DeFi coins that just completely rugged, right?
Is there anything interesting to invest in from a venture perspective, you think, here? I mean, Telegram bots are the one, like, quote unquote, tooling in this sector that like you can expect that like meme coins continue to grow, Telegram bots continue to grow because they're just like the primary interface. It works really well for them because they get to charge really high fees. Meme coin buyers don't care about fees because you're buying a lottery ticket basically. And the sniping dynamic is like pretty important to Telegram bots. But outside of that, have you seen like, let's say you're excited about meme coins for the next 3 years, other than like aping your net worth into Joe Budden, like what else can one do?
Yeah, so I think if you study the price history of meme coins, they rarely trend up into the right. It's not like an asset you can hold comfortably. The price performance is usually like a year of just like no movement, and then suddenly you have 1 month where it's like 5x, and then it collapses back to zero, and then it just flat for a year. No other assets in crypto trade like this except for scams. So it's a little bit hard to invest in from a venture perspective. And I feel like for meme coins, you can't really 100 IQ it. What I mean is, if you try to find something that's like half a meme coin, but they're trying to build products and add utility, it's going to underperform the thing that's like no pretense at all. But you also feel a little bit less secure for holding one of those assets. So it's not something that we can really do like pure meme coins. We invested in meme land, but it's not a pure meme coin. I'm actually interviewing the founder later today as well. But in terms of like pure meme coins, I've had offers for some influencer deals where it's like, 50% discount, and then 3-month unlock, just designed to just like allow me to dump. So obviously I say no to all of those things. But yeah, I don't think that's kind of my arena here. But yeah, I think in terms of like tooling, one very auxiliary bet is probably just like Uniswap, right? People always just spinning up meme coin pools in Uniswap or even Jupiter on Solana. Which actually brings us to our third point of the third biggest thing that happened, which is this massive Jupiter airdrop on Solana. So to give our listeners some context there, Jupiter is a DEX aggregator on Solana. So it's kind of like 1inch on Ethereum. And they did an airdrop for people on Solana, for users for Solana. Now, why this airdrop was interesting and why it was so notable was because it was $700 million notional value at the time of the drop. So one of the biggest airdrops ever, one of the biggest token airdrops ever on Solana. And even today, I think some of the people are still posting screenshots of how much they got airdropped. And we see just stories of like 5-6 figure airdrops, which is insane if you think about it. Just using a product pays you like an annual salary for like an average Silicon Valley worker. So this was a pretty massive event, and I think it prompted a lot of discussion around airdrops as well. And just to give a little bit of context as well, today Jupiter I think trades about $1 billion in daily volume. 1inch on the other hand trades about $42 million in daily volume. So there's a little bit of a chicken and egg. You're not sure if people are using Jupiter and they stuck on Jupiter because of this loyalty that was created by this airdrop incentive. But clearly the product is working and people are happy there. What did you think when you first saw this get a massive airdrop? Did you get any of this airdrop?
Unfortunately, I did not. I just like don't spend enough time on chain on Solana, which is a failure mode of mine. I think it's very cool. I think like as we've discussed before, airdrops have like a really good feel-good factor associated with them, particularly for those who get rich via an airdrop. They actually remain somewhat loyal. And there is kind of a great money flow that happens where you basically, it's not actually out of thin air, but whatever, you kind of produce money out of thin air for a bunch of retail participants. They sell and they'll start putting it into other parts of the ecosystem. So it's nice to see Solana liquidity flow. Overall, I think it's just been emblematic of how amazing the Solana story has been. Like Solana has clearly had an amazing renaissance. There's a whole bunch of builders who stuck with it. There's a whole bunch of users who stuck with it and they're being rewarded. One other aspect of this that I think is underrated is like the Jupiter founder is insane at founder marketing. And it's also kind of emblematic of how this stuff is changing. I don't know if you've ever seen, but he's just like particularly before the token launch. I only saw a couple of hours of this, but he's just like on stream all the time. He's like on stream talking about Jupiter, talking about the token launch, talking about live, chatting with all his streamers. It's actually like a delight to see in some ways. And so it's just cool to see also. I think people underestimate how founders can actually get really close to their communities, particularly for kind of degen products. I think it works really well. And so Meow is like a great streamer, and his like streams are very widely viewed by Jupiter people. And actually he'd like walk through the dynamics of the token launch very carefully on stream and stuff. But yeah, I think it's just a sign. No, he streams himself building, talking. I don't think he streams himself trading, but I should check that. But yeah, I think it's just like emblematic of like the Solana story is amazing because I think it's just very clear that like it's the block. Like if you're not hanging out in the Ethereum rollup ecosystem, the obvious choice to build is Solana. Like I think it's like, and it has so many competitors in this kind of alt L1 space. Like remember how last cycle everything was about Sol Luna AVAX. That was the trade. It's been a minute since then, but yeah. So I think it's just cool to see that Solana has like emerged from a very tough period, and a lot of the reasons that Solana pitched itself as an interesting technical platform are actually the reasons it's succeeding. Like people do want to trade meme coins and do all this DeFi leverage stuff and want to do it with super low fees. And Solana gives you a place to do that.
We're probably two of the very, very fortunate people to have seen his entire Solana journey quite early on. I remember back at our previous, employer at Spartan, we were advising Solana back in 2018, 2019, and Kelvin, our boss at that time, tweeted about it recently as well, about how they were advising Solana's raise during one of the craziest times. And then I got to see kind of Solana start from a complete startup. Actually, the first time I saw them was even before Spartan. I was traveling to San Francisco in 2018 for a crypto event, and I couldn't afford a ticket at that time. So my good friend Bonnie from 500 Startups actually flew me out there. And then I went to a panel, and Solana was one of the speakers. Near was another. There was Oasis as well. But back then, Solana was just a startup. They just raised their first seed round. And then now we see this as like the pinnacle of how you bootstrap a L1, which is really, really crazy to me. So it's still one of my bigger bets. Personally, I think it is it's kind of cemented itself as the onboarding funnel for retails this cycle. And you can see by just the sheer volume of meme coins that are happening on Solana. And my info thesis has always been incredibly simple, which is like, I think users over time want cheaper and faster. It makes no sense for me to think that users want to go the other way, which was why I was so hesitant to kind of submit to the BRC narrative, because it was going slower and more expensive. But I do see, a market niche for that. But yeah, so Solana, I think, checks all the buckets. I think in terms of like the implications for other L1s, do you think people should just stop building L1s? Like, is this pretty much over, Solana cemented, or are there any avenues for other L1s to maybe craft out a market for themselves?
Yeah, I mean, the first answer to this question is like, we have lots of L1s that aren't widely used that trade at multi-billion-dollar valuations. Now, they aren't fully unlocked. There's lots of stuff. But even Oasis, like, probably was a pretty decent financial return for its investors and founders, even though no one uses Oasis anymore. I don't know what Rose trades at. Okay, Rose trades at 1.7 billion STV, and it's almost fully unlocked, right? So I think like the answer to whether you should build an L1 is that like if your failure mode is Rose, like yeah, you should build an L1. You'll get rich. Like I think like it's funny how many. It was funny how many times I've spoken to people and been like, the way to get rich in crypto is to start an L1. I think that's actually like, it remains shockingly true for some reason. And so I think it's like, yes, from a product perspective, I think Solana does occupy a very serious place and it's going to be very hard to compete. And so Sui and Aptos are examples of chains that were truly launched to basically compete for the marginal dev who would build on Solana. They're fast, they're parallel, they're low cost, they use a new programming language. Those devs are like, those users are not going to Sui and Aptos. They're very much going to Solana, at least for the time being. And so I think like from a perspective of like, what do we need and what's interesting? Yeah, you should build an app on a rollup or on Solana. Like that's what you should build. But also, like, I can't in good conscience say, like, you shouldn't launch another L1 if you want to get rich. Like it just is, like, we love funding these things. Dragonfly is continuing to invest in them. We broadly do still think, like, there is infra to be built here. And it can get faster and cheaper, and it can get to a point where we can basically, like, accommodate crazy levels of scale. But yeah, I don't know. I think, like, the question of whether people will build on your L1 and whether you'll get rich building an L1 are like so far apart these days that it's just like hard to answer you with a straight face. I don't know. How do you feel about the L1 kind of landscape right now? There are lots of L1s raising today. Like it hasn't stopped. And there are lots of funds funding them today. Like there's no reason to believe that it'll stop.
I think as long as the valuation floor is higher for L1s than apps, that will continue. I was hoping that actually Axie would be the inflection point, right? Axie was the first app in crypto to be multi-billion dollars, and it had the numbers to support it. And this cycle round, objectively, we do have more application layer things that are.
I mean, Axie launched an L1 though. Like that's what they decided the best way. Like, so,
that's fair.
I feel like that's the other thing that happens where everyone in crypto, once they reach a certain scale, they like we launch an L1. What else is there to do?
They just verticalize and start their own L1s. Yeah, that is a good point. I think that will continue to happen as long as the market thinks fat protocols is still a thing, which it seems like it is, right? It just allows you to dream a bigger dream if it's infra layer versus application layer. So that is a challenge. In terms of like opportunity for founders, personally, I feel like there's a lot of founders that are trying to do a lot of low-level optimizations and make chains faster, marginally faster. I think unless you can create like a 10x type of performance, trying to create like a 20% faster Solana probably isn't worth it. In terms of like offering other languages, obviously Aptos and Sui, the big sell back in the day was like Move language is going to be huge. I think that might be worth exploring if you're creating kind of ability for developers to build with other languages that are bigger than Solidity. But at the same time, I feel like maybe transpilers can kind of tackle that market if you have like a Move transpiler down to EVM. So for me personally, I'm still very excited about EVM just because it's had the most Lindy in crypto thus far, and it has the biggest community in crypto thus far. So if you can create a really, really fast kind of Solana performance thing for EVM, I think that's a huge, huge market. I'm willing to, place multiple bets there. The one that we did with Say, unfortunately we missed on Monad. And there's a few others that we're looking at right now. I think that's a pretty big market opportunity. So speaking of infra, the other big thing that happened is obviously EigenLayer, which you mentioned everybody's talking about it. ETH Denver. Specifically, I think A16Z put in $100 million in cash into EigenLayer before their launch, which is probably the biggest venture check at technically pre-product that I've seen in crypto this year. And obviously the EigenLayer kind of pre-launch, they already have this points system that allows people to put in Ethereum to get some points and maybe get an airdrop later on. And that has reached $12 billion before the main function is even live. So obviously it's like an insanely big paradigm shift. I think a lot of people are saying this is the most exciting development since Ethereum. Specifically, I think Olaf from Polychain went on a podcast recently. I'm not going to say which one because they're competing with us. But he mentioned that this is the biggest thing since Ethereum, which is a big claim to make. I know you have a lot of thoughts in EigenLayer. We talked about this a lot as well. But what is the hype for people who are just hearing about EigenLayer for the first time? Why are people so excited about this thing?
I think for the first time, it is an actually interesting, novel new primitive. Like we don't see a lot of those. And it's one that actually, I don't know, makes a lot of sense from first principles. It's basically this idea that, look, Ethereum is very valuable, which means that Ethereum's proof of stake security and validator set are also very valuable. Ethereum is like the gold, outside of Bitcoin, Ethereum is probably the gold standard for secure compute. And I think the key insight of EigenLayer was that like the only way currently to leverage Ethereum's trust is to build a smart contract on Ethereum or maybe a rollup. And there are lots of things that people want to build that cannot fit into a smart contract on Ethereum, but would still benefit immensely from leveraging Ethereum's validator set and Ethereum's trust and Ethereum's like security as a proof of stake asset. And EigenLayer essentially like allows you to use Ethereum to secure your new blockchain network or new blockchain application that may or may not be a smart contract. So I think that's kind of, from first principles, it's a really interesting idea. And I've always been hugely excited by EigenLayer. I guess one point on the hype right now is that it feels like it's kind of, and crypto narratives that get hot always do this, it's just kind of gone into la-la land, for lack of a better word. Like people are just insanely hyped. People are pouring money into this contract. People are just farming a massive EigenLayer airdrop. And if you think about like, EigenLayer, the product sells security effectively. And so I think where what's really important is paying attention to EigenLayer's AVS ecosystem. AVS just refers to a startup that's basically buying security from EigenLayer. And I think that's also been super impressive. So at each of these conferences, they've kind of announced new partners who are building on EigenLayer, and increasingly, like a statement that doesn't make a lot of sense, but I spoke to a VC at ETH Denver, and I asked them like, what's interesting to you these days? And they said, we're looking at investing in AVSs. And I was like, what does that even mean? Like AVSs are like sequencers and oracles and anything infra related. But I think the key for EigenLayer, outside of just getting token hype and TVL into the contract, is really finding people to sell the security to. And I think they have done a great job there. For a pre-launch product, they already have a list of great customers, people like Espresso Systems, people like Near, people like Wormhole, people like Ritual, all of whom have kind of agreed to buy security from EigenLayer. And that's a crazy customer list for a pre-product. And so I think as long as they continue to find customers who want to buy this security, who want to buy Ethereum security through EigenLayer, the hype plays out correctly. If that stalls, then I think there may be a little bit of a struggle. But I think that's where I'm paying the most attention to understand, like, are there actually a lot of customers for what EigenLayer is selling? And the answer, at least till now, seems like, yeah, there are quite a few actually.
Yeah, I think this is the best BD I've ever seen. I don't know if that's because they hired Calvin Liu, who used to be with Compound. I think when they announced that they hired Calvin, it was people were very, very excited because they saw the success with Compound. So shout out to Calvin Liu for probably helming a lot of those initiatives that you mentioned. I think with the market, it's probably finding ways to speculate on EigenLayer before the token launch, right? So with Whales Market, we talked about the points there, implying some crazy valuation. But I won't be surprised to see EigenLayer just being like a top 20, coin when it launches. And there's already multiple companies raising venture money to build DeFi primitives on top, right? This idea of like liquid restaking tokens that allows people to have liquid representations of restaked ETH that uses EigenLayer. So I can name like Renzo, I think Puffer, EtherFi just got announced for Binance Launch Pool, Rio, which is a portco of ours, and Blockchain Capital. They're all, either in market or coming to market soon. So I've never seen a single ecosystem with this much venture money poured into companies building on top of it before its launch, right? Even for Solana, this really only happened after FTX enshrined them as like the serum chain. So it's very crazy to me. And obviously with this, a lot of people are talking about systemic risks as well. We're not going to tackle them in this episode. I recorded a full interview with Sriram, the founder of EigenLayer, talking exactly about the systemic risks. He's very open to talk about all of this. So feel free to check that one out. But speaking of systemic risks, this leads us to our next big topic, which is Ethena. So Ethena just became, in Q1, the biggest revenue driving application in all of crypto, right? So they just topped the revenue charts. If you plot just the fees made in the past month for every single application in crypto, excluding centralized exchanges, the biggest one is, I think, Ethereum. The second one is Tron. The third one is Ethena. So it's become the top app in DeFi already. So this is obviously a big, big deal. And I think a lot of discussion on Twitter has been around whether Ethena has crazy systemic risk, which we've talked a little bit about before as well. So let's touch on that a little bit. What are your thoughts on, well, first of all, actually, even before that, when I tweeted out that Ethena is now, the highest fee generating DApp, I think a lot of people took offense at the fact that I called it a DApp, where the D stands for decentralized. So what are your thoughts on this, first of all? Like, does it qualify as a DApp for you?
Yeah, absolutely. I don't know. I mean, it just also feels like the most nitpicky thing, like someone has built something that people really want. The only way it scales is by doing some part of the trading off chain. And that's just like the nature of liquidity right now. I think, Dragonfly is obviously an investor in Ethena, but we're also just investors in things that people want. And I think worrying too much about is this decentralized, centralized is not worth it. I think they're very upfront about the risks of centralized custody, and they've thought through them super intelligently. They use partners like Copper, and they make it all transparent, and that's all you can really ask for. I think there isn't a version of Ethena that's entirely on-chain, because that was tried and it failed, because there isn't on-chain perp liquidity. So the question of whether it's a DApp or not is kind of irrelevant. It's like, okay, we want to build a tokenized basis trade stablecoin, and the only way to build it is by tapping into off-chain liquidity, and they've done it correctly, I think.
Yeah, I think the correct way to think about the trade-off is if you are comfortable custodying some of your assets on some of the biggest centralized exchanges, like if you have funds on Binance, OKEx, Bybit, and so on, you are probably comfortable with the risk that you take on Ethena, assuming you also do liquid staking on like Lido, because it's pretty much the same risk. You're exposed to the same counterparties. So it's not as decentralized as something like I don't know, like a Frax, but I think decentralization is a spectrum, right? So they are not centralized in the sense that they're decentralized across multiple parties. It's not like all of your funds are custodied on Binance. In fact, none of it is custodied on centralized exchanges, and it's split across multiple multiple counterparties here. So so that's kind of my thought there. I know you wanted to touch on the Endgame situation on Maker as well, because I think the founder of Ethena, Guy, talked about how complementary Ethena actually is to Maker. Do you want to kind of explain that thought a little bit?
Yeah, I just thought it was very cool that for a product that's so new, Ethena actually recently got a shout out on Rune, who is the founder of Maker. Often writes kind of these end game plans of like that are just like a broad overview of what's happening at Maker and where he wants to take it. And in this plan that I think was published like 2-3 days ago, he actually says that one of the sources of yield that he's most excited about for Maker is actually perpetual swap yields that they can tap into using mechanisms such as Ethena's SUSDE. So it's kind of crazy that like Rune basically said this like fits very well into our plans considering Ethena's just launched. And I think it's a sign that again, like people want the product that Ethena's building. And there are some like valid concerns that the team has thought through very carefully, but I think that's the most important thing. Like you can see by the kind of almost parabolic increase in TVL, by the mentions on your timeline, by how angry it makes some people, by the fact that like the biggest DeFi institutions like Maker are taking Ethena very seriously and seeing why perpetual swap basis yield is effectively like an important source of yield in this market and deserves to be treated with seriousness. It's a cool sign. I don't know.
I think a really telltale sign of just like hype around a product is the emergence of scams. I think there's a huge ton of just fake Ethena Twitter handles. So if you're listening or watching this, be careful. I think as of this week, March 13th, when we're recording this, everything you see on Twitter related to a token airdrop right now is a scam, is fake. So only follow the official kind of Twitter account there. But yeah, I think this was one of the most exciting investments we've done as well, and I'm glad we did this together. Speaking of investments we did, let's look at investments we didn't do as well, because I don't think either of us were very deep into the BRC train until quite recently we started looking into it. So just to give some context here, so this quarter specifically, there is a massive growth in ordinals and BRC20 tokens on Bitcoin, which started in November of last year, I think. So the first wave of this came in June when people started doing Bitcoin's version of NFTs, which are inscriptions. So for Bitcoin, there's no smart contract, so you can't really create NFTs, but you can inscribe details into the UTXO on Bitcoin itself, which create kind of NFT-like assets, which people started trading. So that was, a fad for like a month. And then in November, it came back with a vengeance. So now it's like a whole ecosystem now. I think someone mentioned to me there's like 64 Bitcoin L2s that are launching this year. And there's probably hundreds that are raising right now. You mentioned on our BRC episode with Katrina, which listeners can check out as well, that there's something called Merlin Chain that nobody even knows about, but they hit like $1 billion in TVL. But the West is completely blind to it, which is insane to me. So are you excited about this vertical at all? Like in terms of like the dozens of L2s, how many of these have you aped into already?
I have aped into none. So it is kind of crazy. Like, Merlin does have more than $1 billion in real TVL. Like if you look at the Merlin, so I dug into the Merlin figure a little bit. Some part of the TVL is composed of BRC 420s, which don't feel like a real thing. So I'm just like saying that. I don't know. I'm definitely not an expert, so I won't chat too much here. I think what I'm sensing is that people want a place to play money games with Bitcoin. Ordinals are doing exceptionally well. People are excited about this ecosystem. There are like a lot of retail participants I know in the market are basically spending a lot of time trading ordinals, minting ordinals. I do think Bitcoin was not designed for tech innovation. And so there's a bunch of teams doing that, and I wish them well, and I hope it works out. But like, that's not something I'm hugely excited by right now, because it feels like you're trying to shoehorn like proofs and verification or DA into Bitcoin, and it just wasn't built to do that. I do think it's pretty likely that there will be like a roll-up that basically, I'm I'll put air quotes around rollup. There'll be a chain of some kind that like allows you to easily bridge Bitcoin over. And they gain a bunch of TVL and they play the L1, L2 playbook really well of getting the right influencers, getting the right people to build apps, making sure there's like a robust ecosystem without getting too worried about security or technical considerations. And this chain will do a massive airdrop, the kind that has never been seen by Bitcoin holders before. And that will be pretty game changing. So I think once Bitcoin people are like, get an airdrop and realize they can play in L2s, they will probably be excited. I'm not hugely excited by the sector because it just doesn't feel like Bitcoin was built to do programmability. But I think startups like Babylon, some of these Bitcoin L2s may be more successful. The truth is, I'm also like, this is like definitely a failure mode of mine where like in my head, I'm just thinking about Ethereum all day. And so I always struggle with like, Bitcoin really feels like, what are you guys talking about? Like, what do you mean by ZK rollups on Bitcoin? Where we have like the cutting edge happening on Ethereum. So I think that's where I'd land on them. I don't know. How excited are you? Are you getting more excited or less excited over the past few weeks as the market is definitely getting more excited?
Yeah, I definitely am getting more open-minded. I was very much in the same camp. I always thought, okay, Bitcoin's entire value proposition is immutability. We don't want to build things on it. We don't want to, fuck with Bitcoin in any way. And, all of the degeneracy, all the crazy shit should happen in other L1s. But then I also realized that there's actually a massive, especially in Asia, the early kind of Chinese mining whales. And these guys are sitting on billions of dollars of liquid Bitcoin. I think one of the founders I spoke to, I asked them, okay, what is your go-to-market distribution strategy? How do you get your first $100 million, dollars worth of Bitcoin into this protocol? And they're like, oh yeah, I know a guy who literally has like $1 billion in Bitcoin just sitting on Binance, and he showed me a screenshot, and I was just blown away. And I know these whales exist. We've talked to some of them back when we were working at Spartan, but it's just crazy to me that they are so different from your average crypto native. And what they're looking for trade-offs, I think there's different tiers. So if they are very comfortable with centralized custodians, they probably hold some wrapped Bitcoin on Ethereum and earning yield on some DeFi protocol. If they're less comfortable with that, but they're more comfortable with they're still okay with like L2 security, they might use some of these L2s, especially if there's like DeFi protocols on them. Now, if they're not comfortable with that, then there are teams that are trying to build kind of VMs natively on the Bitcoin layer 1 layer using verifications, or using validity proofs or fraud proofs. So I do think that there is like a tier of product for every type of whale that has a different type of trust trade-off that they're comfortable with. I don't know where that is. Maybe most whales are just okay with putting it on Binance and they would just all use wrap BTC and use it in DeFi. Or maybe there's actually a large contingent of whales that are like, no, I don't want to touch any L2s. My Bitcoin is precious to me. I don't want to trust centralized custodians. I only want to use, native L1 kind of VMs, which I think might be, a market opportunity here. So I'm willing to make bets there. But as you say, I think this kind of, even though we're based in the East, I think this is kind of caught me by a surprise a little bit just because of my initial bias against using Bitcoin for development. But this is something that was, I think, one of the most significant things to happen to Bitcoin as well, just because, there's historically not been much happening on Bitcoin other than, price go up and maybe some stuff around Taproot. So I think for the purpose of time, this is the last one that we should touch on is the Uniswap fee switch. So just to give our listeners context, so Uniswap is obviously one of the most, profitable applications in crypto. It's the go-to kind of DEX on Ethereum, and they issued this kind of governance token years ago. This massive airdrop actually back in 2020. But the token never really had any use case. It's actually just a meme coin. You can use it to govern the protocol, but all the fees that Uniswap was earning did not accrue to the tokens until, I believe, 2 weeks ago, someone put out a proposal to turn on the fee switch for Uniswap, which accrues some of the revenues earned by this massive DEX to token holders. So that was one of the biggest things that people were praying for during DeFi summer, that we're going to turn these tokens into revenue accruing tokens, but, potentially also exposing them to security risk. Securities as in, them being classified as securities and regulated, not the security as in, safety. So what are your initial thoughts there? Do you think this vote will go through?
So I think it'll take a bit for fees actually to get collected. My understanding of what happened right now is that the fee switch proposal passed, but then the actual proposal that would upgrade the contracts failed because there were a bunch of valid concerns about like smart contract security and kind of bugs that may arise through this process. It's pretty convoluted. I think more than anything else, in the like I'd start by saying, in the vein of like a sharp person told me recently, tokens are just content and they compete for attention. And so I think it was nice that like DeFi had attention for a week. And in that week, everyone noticed, hey, these coins are really cheap, and doubled the price of every single one of them. Admittedly, you're right. It was through a very bullish period. But I guess, look, I'm a huge fan of the large DeFi protocols that are working and continue to do great things. So like I'm like a huge Aave stan. I think they kind of, Aave V3 actually pushed the needle forward. They're building cool products. They continue to chug along. They've turned into cash flow generating businesses. And I really like the end state for the largest DeFi primitives. Having said that, they continue to be pretty like boring investments. Like they feel like stable coins. They never outperform ETH. And I don't know that will change. So I guess I was looking more from just like, I was excited that people were like paying attention to DeFi tokens again. I think the truth is like, it's funny because the rest of DeFi re-rated, but like Maker already does buy back and burn. Like they do that already. I believe Aave also has some mechanism for like staking and a fee return. So it's really just Uniswap that has struggled with this. I think eventually Uniswap does turn on fees, and I think that's hugely bullish for token holders. But I think also it's nice that people are like, it's nice that DeFi coins got like a week of people paying attention to them, because I do feel like they're just kind of like, they're just kind of there. No one talks about them. They work, they have teams. They're really great companies in some ways that have kind of lasted through multiple bull and bear markets. So it's nice to see. I don't know, how did you feel about like this Uniswap fee switch debate?
Yeah, I basically saw it, and as I fully expected this re-rating, because I know nobody holds DeFi tokens anymore. No funds, no retails, nobody cares about DeFi tokens. They use the DeFi protocols, but nobody owns the token, so everything went up as expected there. But in terms of like long-term implications, I'm still mostly drawn to like the novel stuff. Like I haven't seen a 0-to-1 moment in DeFi in a long time besides Ethena. So hopefully Ethena or these LRTs, these liquid restaking tokens, start to reignite some interest in DeFi. We start to create some weird and interesting shit again. Hopefully we don't blow anything up this time. But yeah, so this was one of the more kind of bittersweet moments. I think we've been waiting for this fee switch since we were both back at Spartan, so that years ago. But yeah, they finally made it happen. But yeah, so there you have it, folks. The 5 or 6 biggest things that happened in Q1 if you were living under a rock or if you just came back to crypto. Make sure you send this episode to any friends who are trying to get back into crypto again. Hopefully this was a helpful recap. And if you want to reach out to either of us, both of us are on Twitter. So we're going to include our handles in the show notes below. But yeah, thanks for taking the time, Sanat. I'll see you on the next roundtable, man.
Thank you.
Hey, thanks for supporting another episode of the Blockcrunch podcast. If you've enjoyed this episode, please give us a 5-star rating on Spotify and Apple Podcasts or whatever platform you're listening to this on. It really helps us a lot. Or if you prefer YouTube, you can subscribe to our channel on YouTube as well to not miss an episode. I'd love to hear from you guys as well, and I personally make sure to read every single comment on YouTube or tweets that are directed at me. So feel free to leave a comment there. Let us know what project you want us to bring on or what trends you want us to talk about, or tweet at me at Mr. Jason Choi or at the Blockcrunch on the platform previously known as Twitter, currently known as X. And thank you so much for supporting, and I'll see you in the next episode.